Living completely free and clear off dividend income is something that basically every single dividend investor wants, but something that unfortunately a lot of dividend investors will never achieve. Now, this is simply because most dividend growth investors that invest into things like the VOO ETF or the Vanguard S&P 500 ETF that has a trailing 12-month dividend yield of just 1.36% means that in theory, for every single share of the VOO ETF an investor buys, they're only going to receive around 53.4 cents per month if you were to divide the trailing 12-month payout by 12. Now, this also means that if an investor wanted to live off of VOO's ETF, for example, if they had a monthly expense of $3,000 per month, they would need to invest around $2.85 million into this ETF. But in this video, I'm going to share with you what might be one of the fastest yet safest ways to live completely free and clear off dividends for just pennies on the dollar compared to what an investor would have to do to live off of dividends by investing into something like VOO. So if you have an interest of potentially living off of dividend income in the future, make sure to stick around, drop a like down below, and let's get into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first things first, if you think that I'm going to say to invest into something like TSLY, the Yield Max Tesla Option Income Strategy ETF, that has decayed over 64% over the last year or so, that could not be further from the truth, and that brings me into my first topic. If we want to figure out a way to live free and clear off of dividend income, but for cheaper than that of investing into an average index fund, but also not invest into something that is going to be a sinking ship long term, we are going to need to find an ETF that offers a massive starting yield, because for this example, an investor would not have millions upon millions of dollars to invest into. But on top of that, we're going to be looking for something that has a sustainable dividend long term and also does not have massive decay over time. Now, the first ETF that I think could be a great potential option for an investor that wants to live off of dividend income as fast as possible and for much cheaper would be to buy into something like SPYI or the NEOS S&P 500 High Income ETF. Now, SPYI's strategy is very interesting, so listen in. It says the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven call option strategy. On top of that, the fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing SPX index options classified as Section 1256 contracts, which are subject to lower tax rates. So on top of SPYI, invested into the S&P 500, which is relatively safe, and generating income through options, it's also going to be tax efficient, or at least seeking to be. And then lastly, the fund utilizes a call option strategy that may include both sold and purchased SPX index options. So not just selling options, also possibly purchasing them, which guarantees the potential for some upside. Now, I know what you're saying, how much SPYI would you need to buy into in order to live off the dividend? We're going to get into that in a second here. But SPY, first off, over the long term has not decayed even close to something like some of the Yield Max ETFs. But on top of that, SPYI is actually up 5% this year, and this isn't even including the massive dividend. And speaking of dividend, SPYI has around 11.8% trailing 12-month dividend yield, with a relatively consistent payout of anywhere from 46, 47, 48, or 50 cents on a monthly basis. So just going off of some quick math, if SPYI pays roughly, let's say 50 cents on a monthly basis in dividends, and if you're an investor with around $3,000 in expenses per month, let's just say, an investor would need to buy 6,000 shares of SPYI, which currently costs around $50 per share. That means an investor in theory would only need to spend around $300,000 and invest it into SPYI in order to have their $3,000 a month expenses completely covered by the dividend. Now take this with a grain of salt. This is all just estimated. I don't know how much every single investor's expenses are, and of course we don't know exactly what SPYI is going to pay in the future, but we're just going off of historical data, which is all we can use. But regardless, it does make the point that there are other investments out there that have a much higher starting yield than some of the index funds, but also aren't necessarily a ticking time bomb and a sinking ship like some of the other higher yielding ETFs. Another ultra high yielding ETF that an investor could use to pay their bills with just the dividend alone. To pay all their bills with a dividend for much cheaper is SVOL, or the Simplified Volatility Premium ETF. Heading over to the SPIY ETF website, it says SVOL Simplified Volatility Premium ETF. It then says the Simplified Volatility Premium ETF, SVOL, seeks to provide investment results before fees and expenses that correspond to approximately 1/5 to 3/10 the inverse of the performance of the CBOE Volatility Index or the VIX Short-Term Future Index, while also seeking to mitigate extreme volatility. They then said, we believe many traditional sources of income are failing to meet investors' needs in today's low yield environment. But SVOL aims to provide an attractive income stream and source of diversification while seeking to avoid risks inherent in other income producing assets. The fund short VIX position provides investors an optimized exposure for monetizing the premium in the VIX future market. A modest option overlay budget is then deployed into VIX call options to help protect against adverse moves in the VIX. So with this sort of interesting alternative strategy, SVOL shorts the VIX and earns a ton of premium for doing so, but all along they still offer a modest overlay in some VIX call options just in case things go sideways. Now, some more important information about VIX, the gross expense ratio. This is probably one of the worst things about this ETF, even though nowadays with some of these ultra high yielding ETFs, investors are sort of numb to say 1% gross expense ratios, etc. But SVOL does have a 1.16% gross expense ratio. And again, this is partially because this asset is so actively managed. Now, total assets under management is $609 million, which is up quite a bit year over year. Now, the distribution yield for SVOL, we're going to go over the dividend a little bit deeper in a second here. But as of right now, we're talking a 15.88% distribution, which is much higher than pretty much all dividend stocks and ETFs across the markets, again, until we get into these ultra high yielding options. Also important for those income seekers out there like myself and like probably a lot of you guys, SVOL does pay a dividend on a monthly frequency, which is pretty nice, especially if you are interested in reinvesting consistently a little bit faster. Now, this ETF does break one of the things that we're looking for. This ETF does have some decay, although over the last few years it has been relatively flat. So there was just a small amount of time where it did decay a little bit. But once I show you how much SVOL pays in dividends, you're probably not really going to be all that upset. Now, SVOL's trailing 12-month dividend yield is 16.36%. And on top of that, it's been very consistent for the most part. Now, there have been some months where SVOL has paid much higher than the most recent, around 30 cents more or less per month, but overall this ETF in the last few years has been relatively consistent. Now, because SVOL has been paying around 30 cents every month, more or less over the past few years, let's go off of that number. That means that an investor would need to buy 10,000 shares of SVOL in theory in order to have the dividend income completely cover all their expenses if their expenses were, say, $3,000 per month. And that means that an investor would need to spend $273,000 into SVOL in order to have all their expenses covered. Now, the reality is that even in my long-term portfolio, as you can see right here, I do own some shares of SPYI. I also do have a small position in SVOL. But for the most part, I like to own different stocks and ETFs that I think offer different things. And that's because, in my opinion, diversification is one of the most important things. But I say this all to say that there are different investment vehicles out there that might offer higher starting yields, maybe not as much upside potential, but there are different vehicles that can meet every single investor strategy. Whether it's an investor that's focusing more on income, dividends, or whether there's an investor that wants dividend growth, or of course just wants massive growth potential long term. And the cool thing about building your long-term portfolio is that you can literally have a small piece of all of it. But in the talks of living completely free and clear off your dividends, if you were to have to choose just one high-yielding ETF to use as a vehicle to reach financial freedom, which ETF would it be and why? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.